It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And welcome back to Trading Stocks Made Easy. I'm your lovable host, Tyrone Jackson. And finally, we've got the investment banker back on the Trading Stocks Made Easy podcast. I'm talking about Jason Malone. Hello there.
How you doing, Tyrone?
How are you?
I'm good, brother.
All right. So, when I have you here, Mr. Investment Banker, let's just remind the audience, because we haven't heard you in a while because you've been so busy, a little bit about your background. I mean, you have all the wonderful things that makes someone proud of you. A master's degree, Georgetown. Tell us a little bit about your background and how you got involved in investment banking.
Yeah, man, I appreciate how you pump me up, man. But so I started my career in investment banking. But prior to that, like you mentioned, I went to undergrad at Georgetown University in D.C. And upon graduating, my first job, I was doing sales and trading at an investment bank. And essentially, I was a broker on the trading floor for one of the large investment banks, helping to facilitate trades for large institutions that were looking to buy and sell large blocks of stocks and other securities. So that was my first job. I did that for a couple of years, and then I transitioned into the investment banking side, where I was helping to advise entities, companies in their capital raising efforts and different transactions that they were trying to do within the capital markets. I did that for a period of time, worked my way up to where I was a vice president in the organization that I was working within. And then I decided to do a career switch, and I transitioned. First, I went back to business school. I got my MBA at the University of Chicago. And from there, I started to do a lot of things on the entrepreneurial side, doing acquisitions, buying and selling of companies on my own, as well as helping in different capital raising efforts. Spent a little bit of time on the tech side, in the media side, which has basically set up where I'm at right now, where I own my own media properties, working with you in a number of different
don't you
capacities.
Have a partner in that business?
That's what I said,
Okay,
working with you in a number of different capacities on the media side, and it's been a good ride. But I always lean back on the original skill set that I learned first out on the financial side. So it's something that I always fall back on.
So one of the things that I absolutely love about our friendship is the fluidity, right? And because sometimes I have to talk to you in financial terms, maybe about something we're working on. And then sometimes something will happen on Wall Street. I say, hey, did you see the blah, blah, blah today? And you go, yeah, that was a move that. So the other thing I really like is I am a pure trader. Like I've built my wealth through trading,
Right.
And also through teaching, right? And what I love, and I say this to you all the time, is like, I always say to you, you've touched the sky. You've been there in the room when they're doing those deals. So I think anybody who listens to this show on a regular basis will benefit from hearing, because you've seen billions of dollars exchanged across the table. And as much as people love this show and the whole wealthy investor world, I don't think they really understand that we're talking billions, sometimes trillions of dollars of transactions, trading hands every day on an exchange or through either a merger, an acquisition, a capital raise, et cetera, et cetera. So I am really excited to have you here because I can simply ask the questions and you can give the answers from an insider's point of view.
For sure.
Okay.
For sure.
Now, I have to say this to you all the time. Jason, could you just explain what that means? Because I love explaining things from a very basic point of view, but sometimes your banking hat is on and you have to go find like layman's terms to explain something. Okay.
Right.
All right. So now, just we won't mention names here because there's a lot of parties and famous people and all that. But there is one entertainment entity that you are currently working with.
Okay.
Where the deal flow, meaning the amount of opportunities to partner with brands and celebrities, is just extraordinary.
That's right.
And because I talk to you so much, you go, you will not believe who we're negotiating with today. We'll leave out the particulars. But let's break it down from the very beginning. The reason that a publicly traded company or soon to be publicly traded company would need an investment bank is for what? You just can't wake up one day and go, we'll sell shares to the public. The reason you need that investment bank is for?
Yeah, the simplest way to think about it is that the company needs an advisor as they're trying to navigate the market. And the investment bank serves in that capacity. They help that company understand what particulars they need to navigate as they're trying to determine how much money they need to raise. So whether that's how many shares of stock they need to issue, what that dollar amount is, what the price point is for that stock. There are a lot of different components that they need to understand. And the company is good at doing what they do, whether they're selling widgets or they have a service that they're offering. They're fantastic at that. However, when it comes to navigating Wall Street, they need an advisor to help them understand and decide on what those specifics are for how they need to achieve their financial goals are. So essentially, they hire an investment bank to say, hey, I want to raise, let's say, $100 million because we want to issue this new product. And in order for us to issue that product, we need X number of dollars for buying materials, hiring staff, implementing new technology, whatever that need is. They'll raise that money through the public market, whether they're issuing stock or issuing bonds to help them achieve that. However, they can't just go to the market themselves and do kind of like a direct-to-consumer type transaction. They need a facilitator to help them execute that transaction. And typically that facilitator is the investment bank.
Okay. Now, the investment bank is not only the facilitator, but it has the relationship.
Correct.
So if you and I were to start a company and we wanted to go public to raise money for marketing, branding, to make more widgets or whatever it is that we're doing, we would have to go to an investment bank that had the relationships with Wall Street just to get listed, correct?
Correct.
Okay. And then to explain to investors what we used to call it a forward-looking statement, but how we're going to take this publicly traded money to make more money. Is that correct?
That's correct.
So the investment bank does, I'm trying to keep this in layman's terms.
They serve as the middleman to the transaction, right? So on one end, you have the actual investors. Those are the people that have the money and are deploying the money into investment opportunities. And those investors look like insurance companies, endowments, foundations, hedge funds, right? So, but they speak one particular language: finance, numbers, return, right? That's how they're looking at opportunities. On the other end, you have the company. The company is very good at their particular skill set, selling widgets, providing a service, whatever that is. The investment banking role is to serve as the translator on both sides so that the investor can understand the investment opportunity that the company is providing, while at the same time helping the company understand how they need to position their product or position their service to make it attractive to the investment world. So the banker is like the translator in between, helping both parties understand what the counterparty is looking for so that everyone's ideal needs are met in whatever transaction is taking place.
Now, the investment banking firm makes a lot of money in fees.
Yes.
Right? Because to get an investment banking firm to introduce you to Wall Street or represent you on Wall Street, there are fees associated with it. So that's lucrative.
Absolutely.
And because you're using their relationships, and they get a certain amount of insider stock so that when the company goes public, they can also be an owner in that, correct?
In certain instances, right? And you'll see an investment bank take a reserve position on a stock if they're helping to issue that stock, right? So they'll take so many amount of shares and put that into their own inventory. And if that stock were to increase in price, they'll benefit from that increase in price because now the value of that stock on their balance sheet has increased. Now the overall worth has increased, right? That doesn't happen all of the time. You typically just see it more in a fee transactional type relationship. However, it is extremely lucrative in the sense that if, let's say it's $1 billion transaction, you have company X, they want to start laying the pavement for a new infrastructure project, right? Our president has issued a new infrastructure bill. Now they want to redo all of these bridges and roads. Private company X, they lay cement, but they need the materials to go out and execute on this new project, right? So they need to raise $1 billion in the market to do that. Whether they do that by stock or bonds, that's for the investment bank to help them figure it out. But let's say that the total amount is $1 billion. Well, typical banking transaction fee is anywhere between 5 to 7%. So let's just say it's 6%. $1 billion, 6%, that's $60 million for that one transaction, right? And so that's usually how you see an investment bank generating their fees. By playing that part, they take a percentage of the overall amount of capital that's raised, and they're able to generate a nice revenue stream from doing that.
So much of that $60 million went to you personally, right?
Yeah, I put it in the Cayman Islands somewhere. No, just playing. It goes to the house, right? And some of these banks are fairly large. The one that I was at, had 30,000 employees. So that goes to supporting the infrastructure of the bank. Not everyone at the bank works on the deal side. You'll find that most of the time, the deal making side of the bank is usually like the smallest division. The majority of it is in like technology, compliance, legal, all of the hoopla that goes into being a bank here in the United States. That's where the majority of those fees are allocated to. But since the deal-making teams are generally small at the banks, it's still extremely lucrative for the investment bankers.
Because you guys get commission on some of these deals, and then
Correct.
you get an overall commission at the end of the year.
Correct.
So it's very lucrative for those who can speak that language.
Correct.
And one of the things that I encourage people who follow me in this world is to learn to speak the financial language, because if you knew what was really going on Wall Street every day, you could be a part of that, and you can see deals and opportunities when they're being formed. So most of us who are buying and selling shares in publicly traded companies are dealing in Class A shares. If a company wants to raise more money, they can issue a secondary class of shares. Is that right?
That's correct.
Okay. And what is usually we know they're preferred shares where you get that guaranteed rate of return, almost like a bond. What is the benefit of issuing a second class of shares? Like we saw Google do that a number of years ago.
There are a few reasons, but to keep it simple, I would say the most basic reason is for voting rights. So one class of shares will have different voting rights than another class of shares. So if a company wants to bring in more equity into a company, they want to issue stock, but they don't necessarily want to dilute their voting position, they'll issue a second set of shares that will not have the same voting rights as the first set. So that's one reason as to why you'll see a second version of shares being issued.
Now, what about when a company wants to raise money for a particular effort? They can actually take, the most common shares are Class A shares. They can also take those shares that they have issued to themselves on the inside. They can sell it to the open market, correct? As a capital raise.
Correct.
Right? Why would they do that? To expand the company, the marketing, the advertising, the company's presence all over the world? Is that why they would sell shares to the open market?
Ask that a different way, because
Sure.
I just want to make sure I keep it simple. So,
Sure, I know, because you could go there. Do you understand what I'm saying? You and I are a publicly traded company. We want to expand our presence in China. We can take some of our shares that we have and sell it to the U.S. market without anybody ideally really knowing that we're doing that to raise capital as a form of investment to go in another part of the world, right?
Yeah, yeah. That's if you're looking to expand your company, expand your market presence, you can certainly issue capital to do that. As a publicly traded company, I don't know if it is. You can't do it in a way where no one knows about it, right? Because that's part of being public. You have to file your documents with the SEC, so everyone sort of knows what's happening. But there are quiet ways in which these transactions can be executed such that you're not sending the same signal. So like you asked the question earlier about issuing a different class of shares. That's one thing that can certainly be done to send a certain signal to the market or present for a certain signal to the market from being sent out so that a company can still achieve their goals without scaring the market or making the market feel like they're diluting ownership just because they can't fund their business with their regular day-to-day operations. They need to continue to issue shares and dilute equity in order to do that.
Now, this is the other reason I wanted to have you on the show today, okay? Because I want to talk about your life. Now, you have a hard time keeping things simple because you are very well trained and very well educated. One of the biggest deals that you sat on in terms of dollar value was valued at what? Was it a $7 billion transaction? When you think back at that firm, one of those bigger deals was worth what?
I think the largest transaction that I worked on was this was probably actually I'm not going to say the year because I don't know exactly when it happened, but when Disney acquired Marvel, I was part of the bond issuance with Disney that they used to help fund that transaction. That particular, actually can't remember the size of that transaction, but in addition to like merger and acquisition specific type transactions, I also worked in a capacity where I would help private entities raise investment funds so that they can deploy that capital out into the market. And the largest fund that I worked on for that was a $10 billion fund. The strategy was where they were essentially using that capital to invest into technology-focused companies. It was actually a fund that you probably are familiar with. It was raised by someone that we're very fond of, Robert Smith with Vista Equity Partners. So I had a hand in helping on one of their fundraisers when he was trying to raise, and I believe that the fund amount was about $7 billion. Point being, the dollar amounts are massive, right? You rarely see a transaction, or at least at the level that I was at, you rarely see a transaction that's less than 9 figures, right? So, we're 100 million plus on everything. And it gets you to a point where you start to get numb on the numbers, right? Because it's just everything is so big. You're just always used to seeing so many zeros. And it's kind of funny because when you see something that's $10 million, you're like, that's small. But you and I both would love to have $10 million handed to us right now, right?
That's correct.
But in that world, it's not small. It's not large enough to move a finger, right? Just because of how large the transactions actually are. And so, at any given moment when I was working in that capacity, you're usually working on 3 to 4 deals at a time, all of them over $1 billion, right? So the amount of capital that you are overseeing in terms of like the transactions is massive. And I'm, in my capacity, I was just one person. So if you like multiply that across the firm, multiply that across all the firms that are on the street, you mentioned before, like we're talking trillions of dollars.
Yeah. And one of the things that fascinates me about you is, if I understand this correctly, you don't come from a $1 billion family. Is that right?
Nah, bro.
Okay,
I'm from
right.
Carson, California.
That is correct. And one of the things I have learned about you over the years, it's hard for you to see things small. You only see things in $100 million through $100 million prism, which I have learned to see things through $100 million prism, right? But the difference is I've had to condition myself to expect $100 million in gross profits because it's not how I grew up. So some people, and this is another reason I'm so happy to have you on the show. some people will go, well, listen to these guys talking about billions and hundreds of millions. And what I have learned, Jason, is it is your capacity to receive, to imagine and receive, which shapes your reality. How do you go back into the real world every single day when you've sat and been a custodian of sorts to $55 billion deals, $6 billion deals, and you have to go back out into the real world and hang out with people? I mean, because most of your friends are like you, right? They're very well educated. They've also touched the sky. How do you go back, because you started a number of businesses, and just go back and maybe accept that this business is only going to make $1 million a year or $2 million? Do you struggle with that?
No, I don't struggle with it. And the reason why is because, when I was working in that capacity, I was always able to make it tangible because of what I was exposed to day to day, right? Like my father worked in law enforcement. My mother was an executive assistant for a hospital, right? I grew up in kind of a traditional middle class sort of environment. So everything, I was always able to make it tangible. And what I mean by that is, like, with the transactions that I was working on, I was interested in the transaction, not necessarily for the dollar amount, but because of how I saw it would impact the community at the micro level, right? So I mentioned to you before the Disney and Marvel transaction. Like, that was inspiring to me because I, grew up reading Stan Lee comics and, Disney kid as well, right? And so you see that transaction, and even still to this day, you look at how quickly and how fast Disney is pushing out all these Marvel films, right? And to think about how I was involved in that transaction at a macro level when it was executed, and now I see how it's impacting at the micro level with them issuing films, through their Netflix drops and, through their theatrical drops, right? So there's that piece where it ties back to the day-to-day. The cool part is that I'm always able to be like, yeah, I worked on that transaction. Yeah, I remember how that happened. So there's always that sort of tie-in to, like, how it impacts my day-to-day life. And so that sort of has helped me stay grounded to a level. So instead of, like, floating on the clouds all the time, I just kind of levitate at 2 inches off the ground.
But you would never start a business that was $1 million business because you've seen too much. So my point is, do you realize that having seen things at the $1 billion level makes $1 million kind of unappealing to you? We were on a call not too long ago with someone, and I said, hey, if we wind up doing this with that other party, I just don't want to do it for $2 million. Mm-hmm. I just don't see that. And we got off the call and you said, yeah, that was good that you said that. Because when your perception about what is real and what is out there and what is possible grows, I hate to say it's going to sound so terrible. Who wants $1 million, right? Because it's going to take so much effort.
Well, I think your point is the effort is actually the same. Your effort to do $1 million transaction, quite frankly, is the same amount of effort you're putting in to do a $100 million transaction. Mm-hmm. All you're doing is moving the decimal a few points over, but the effort is the same. You still have to do the due diligence, the same walkthroughs, understanding the components, the details of the business. So if you're going to take, let's say it's like a 40-hour job. So if you're going to spend 40 hours doing something and the outcome is going to be $1 million versus $100 million, but it's still the same 40 hours, it's like, well, why not focus on the $100 million? Because you're going to spend the same amount of time anyways trying to get the deal done. So I think that's the point there. It's not to turn your nose up at $1 million because who wouldn't want $1 million? It's more so like, if the effort is going to be there, we might as well focus on the big number because the effort's actually the same.
Correct. Because you're going to put in that 40 to 80 hours a week doing something. You might as well put your energy into something that's going to be 7 figures and above.
Exactly.
Okay. And that we have always agreed on. And that's what I love about stock trading, because we have had, I guess we can call them mini mastermind meetings, when I say, well, if you grow this entity, we have always agreed that a hedge fund should be part of that, right?
Exactly.
So if the businesses that you and I own together, we always go, hey, the hedge fund is where we'll really make the money. The business is like the facilitator. So stock trading is appealing because you don't have to have a lot of employees. You're just teaching people how to trade in your style. You're giving them some money, and then they go out and make money on that money. But one of the things that I just think is important that I want to emphasize, and tell me if you agree with that, your perception of what is possible informs how much money you even shoot for.
100%.
So if there are billions of dollars, why out there in the world somewhere with our name on it, why are we chasing $1 million?
That's true.
Okay. And when do you realize that you had that shift in consciousness? Or because you're in business school, maybe you were just programmed to expect that kind of success?
No, I think it was funny enough. It was more so when I was still in high school. Actually, I didn't know that it was going to look like Wall Street and billions of dollars, but I think it was when I sort of locked in on the concept of like focusing on more. At the time, I was working at a grocery store. I was a clerk at the grocery store doing, like, I was in charge of bagging the groceries and rounding up the carts outside, right? So, typical job for a 16-year-old type thing. However, in my day-to-day, I think at the time I was making like $8 an hour, $7.75 or something like that. Somebody in the pasta aisle knocked over some sauce.
Okay.
Right? Knocked over like 8 bottles of sauce. And I was tasked with cleaning up all the sauce.
Okay.
And I'm like, hold on, bro. If I'm going to be working this hard, I should be making more than $8 an hour. Right? And so it was the pasta sauce that triggered in my mind that I got to go for more. I didn't necessarily know what that more looked like, but it definitely, I distinctly remember that moment as the moment that turned it on for me, that if I'm going to work hard, I might as well work hard for more, because everybody is spending the same 40 hours a week, right?
Right.
But how can I maximize my 40 hours where I'm making more than $8 an hour, right? Because I look at the guy with the shiny suits and the shiny cars. He's also working. Maybe he's working a little bit more, but he's still working the same amount of time. So how do I maximize my productivity with the same amount of time spent? And so that clicked for me. It eventually turned into figuring it out, because at first I was like, well, maybe I want to be an attorney. After spending some time interning at the Department of Justice, I was like, nah, this ain't it. Just looking at papers all day. I just didn't have the skill set for that. I liked what their paychecks looked like, but I just didn't like the idea of, combing through the documents like that. But I remember I went on this, my school, Georgetown, they used to have these exhibit days where you had an opportunity to kind of like shadow somebody in an industry. And I kid you not, I remember the first time I walked onto a trading floor and I felt that energy that existed on the trading floor. And as a former athlete, it reminded me of like being on the field, being on the court. And I was like, I want to plug into that, because that energy existed. Mm-hmm. And then when I figured out or learned at the time, this was like early 2000s, but I learned that based on your performance, you could make 6 figures right out of school.
Yes.
I was like, bro, that's it. That's what I'm focusing on. Because again, understanding if I'm going to spend 40 to 50 hours a week working, I might as well spend it trying to make the 6 figures, as opposed to like the 30,000 or whatever that the job, the marketing job was offering me. It's like, okay, that person's working 40 hours. That person is working 40 hours. He's making 30,000. He's making 120,000. I mean, for me, it was just basic math.
Right. And this is what I love about being a trader. And I've never been on the floor of the exchange, but I know that there are hedge fund guys and girls right now in this market who are getting $40 million as a Christmas bonus.
Correct.
I find that very appealing. I find the skill set of learning how to trade and grow your own funds to someday get to that $40 million bonus through a corporation that you created. That is a very appealing effort. And if more people understood that they could achieve greatness financially because they get that education, that's amazing. And that's why I'm so happy that you're here, because, you toss around numbers that are very large. and you have the education as a banker to back it up. Some people say I toss around numbers that are very large. That's only because I understand how much money you can actually make trading.
Mm-hmm. Yeah, I think, another way of saying it is, if you can perceive it, you can achieve it.
Yes.
And I think the overall energy on Wall Street and industries that are similar to Wall Street, because this dynamic exists in other industries as well. But I think it's a mindset of abundance, right? And so that mindset of abundance creates more abundance.
Correct.
And so I appreciated the frequency of thought that existed when I was on Wall Street. And that sort of played into like another reason why I was interested in it, right? No one thought small. And I mentioned to you the story of the pasta sauce or whatever, how it triggered me to start thinking bigger, like working in a capacity where everybody around me was thinking big all the time, big numbers, big ideas, big parties, whatever it was just big, right? And so that mindset of abundance just created more overall abundance. And that existence, it just trains you to think, well, if I'm going to do something and I'm going to spend the time, I might as well do it big.
Yes. He speaks. The investment banker tells the truth. We're talking to Jason Malone today about investment banking and thinking bigger. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Are you thinking big or are you thinking small? When you're trading on Wall Street, your salary, your income, the amount of trading income you can generate is not capped. And the other thing I love about trading is it doesn't matter what you look like, your rising sign, your gender, or any of that. If you know how to trade stocks on a $1 uptick, the world is yours. Jason Malone,
how you doing?
You are here with us today, speaking financial from your point of view. So I want to talk about you kids. You have 18 kids? How many kids you have right
31.
now? 31. Yeah, you and Nick Cannon. I can't even remember.
No, I have 4 kids, three daughters and 1 son.
Correct. And when you think about the amount of knowledge that you have financially as to how the world works, what do you want your kids to know about their earning potential in particular?
Number one, I want them to understand that as long as they continue to think big and they remain creative, there's actually no cap on their earning potential. I want them to understand that the ability to generate $1 is inside of them. They just need to understand how to use the tools and the hammers and the gifts that God has given them to achieve that. So never feel as though that they're boxed in. Everything is inside of them, essentially, as long as they believe it's inside of them. So that's kind of the main thing, is just having that mindset, having a mindset of abundance. There's no shortage of money in the world. It's just, how are you applying your skills? What value are you providing to other people so that you can get back what you want to get back? So that's I think the main thing that I want to drive home, because as long as they understand that, they'll always be able to fend for themselves. And then as it relates to their earning potential, that's a metric, right? Because one of them might want to be an artist and not necessarily be focused on the dollar amount per se, but I still want them to just understand that their potential is not dictated by someone else. It's based on how they view themselves, the abundance that they view that they can achieve. And as long as they hold steadfast to that, there's no limit to their power.
Let's talk about, you have a business relationship with a famous person. And this famous athlete, right, is deals are coming his way constantly. And part of what you do is with him and for him is you assess the deal flow. What does that mean? So, for example, if a brand says, hey, we'd like to sponsor this event, that's great. But if a brand says, we'd like to partner with you on a long-term enterprise, that's where you now, for that famous person, have to break down cash flow, opportunities. What do you look for when those kind of deals comes his way?
Yeah, I think especially when you're looking at partnerships, it's how is this equitable? Essentially, how can this benefit both parties, right? You understand why the initiating party wants what they want and what they can get out of it. We'll say it like that. But how does the counterparty also benefit? And is that benefit mutual, right? So when I'm looking at those opportunities and I'm assessing what's going on, it's from a standpoint of like, how do we make 1 + 1 not necessarily equal 2, but how do we make it equal 3? Like, how do we take these two components, put them together, and create more overall so that everybody involved is happy? And so there's a number of ways in which that can be looked at. It is not always defined by the monetary aspect. There's community, there's social, there's a lot of things that can be assessed. So I'm not always looking at it from the lens of the money, but ultimately that's overarching, like what I'm trying to understand, like what's the mutual benefit for both parties, and how will that benefit last, and how can we make sure that it's sustainable so there isn't any burnout.
So sometimes you see things in the deal that person doesn't.
Correct.
Not just financial, but are you saying you also see other marketing opportunities?
Marketing opportunities. There might be communal opportunities, right? Like, because not every goal is a financial goal, right? You might have altruistic goals in terms of what you want to give back to the community, things like that, right? And so it's having the ability to look through it through a lens where you're able to unpack all of those aspects, and it's not always just numbers from a dollar standpoint. It's, maybe this person has a desire to raise their profile and essentially like be more famous or whatever that is, right? It's just understanding what all of those levers are in terms of value add when you're assessing the deal.
Well, I don't know if I'm an investment banker, but I've been in talks with someone, right, who's a friend, and I've been showing that person how to raise their profile. And my beliefs are a little bit more, like, I believe you can really magnetize business to you. So when you're doing a deal, particularly if it's with brands, you can actually get the attention of other brands and create a residual income stream where you are at the center. So I was saying to this person the other night at dinner, I was like, listen, you are a force because of who she is in Hollywood, right? What if you create a $10 million wheel around you that just doesn't stop? She's like, oh, I love the way that you think about money, right? So the goal, like you said, isn't always financial, but that person can become like a deal maker and set up streams instead of one deal. Do you know what I'm saying?
I do, yep.
And I find very often, unless you train your brain to think in terms of residual income and opportunity, that the person who you're helping or having dinner with or whatever, they can't see those opportunities. Do you understand what I'm saying?
That's right.
And so that's part of what you do for this particular person, right? You offer other ideas and maybe other streams, or are you literally looking at the benefit of that deal that's in front of you?
Yeah, you want to look at it holistically, right? Mm-hmm. So not looking at it in a vacuum. You want to understand all of the moving parts for those that are on the table for that specific deal, as well as the pieces and components that that maybe that counterparty is not aware of, but you just know because you're in the business, right? Okay. So there are value points that you can identify just in terms of like your overall understanding of what's possible. And so one of the ways that I just try to look at it, like in general, is like when people are coming to the table, it's like who who can this help and how does this help, right? Someone that I listen to all the time, Earl Nightingale, he has this saying where he says, the more people you help, the more value you will create.
Yes.
The more money you will make.
That's for sure.
But the more money you will make is the last part of it, right? The first part of it is the more people you help. So when I'm looking at the opportunity is like, how does this help? Who is it helping? How many is it helping? Mm-hmm. Because if those questions are being answered the right way, the money is just going to happen, because that's just how capital works. Like you continue to help people in a way, in a magnified way, mm-hmm. in a scalable way, mm-hmm. the money's just going to flow, right? But if you're starting with the lens of like, how is this helping those that are involved? So that's kind of how I try to approach it. And that makes it more human, right? And so people can feel that. And the reason why that's important is because 9 times out of 10, when you're doing the deal, the deal is another person as a counterparty. And that person has to trust you to want to, lock in on that deal with you. And that trust comes from them feeling like there's an actual tangible sort of human thing that's happening. And it's not just money, 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 money. I mean, don't get me wrong. Some people are like that. Mm-hmm. But in the way that I try to conduct the business, it's always starting with how am I helping, and how am I developing trust with the person on the other end of the table, so that it will make this transaction more frictionless. Yes.
And yet another point where I absolutely 100% agree with you. I want to ask you about your future success, so that I know I've captured you here in this interview before you just blow up and get all big on me. But before I get into that, so your circle of friends, I'm always blown away by, because you say, hey, Tyrone, guy wants to open a bank and he wants me to run it. And I go, this is very different than how I grew up. And then, do you remember, it was maybe about a year ago, there's a very smart guy. There's so many smart guys in your circle. He wrote some dissertation on his own about U.S. economic cash flow versus Europe. Do you remember this? He goes, hey, do you want me to send it to you? I was like, no, I think I'm okay on that.
That's my guy, Perry. Shout out to Perry. That's my guy.
He, on his own, on a weekend, he's writing some economic dissertation about U.S. economics in the future and blah, 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 blah. So you surround yourself with people who are like you, which is not surprising, because in the universe, it's like attracts like, right? We all want to be like people who we feel most comfortable with, people who are like us. Your circle is absolutely amazing. So with all that right? How many times we're sitting around in a meeting, you're like, oh, I know that guy. He started that cup. And I go, okay, Jason, all right. You see why I always say you're like the smartest guy in the room? So with everything that you know that is possible, and the knowledge and the experience of having touched the sky, what do you want for yourself? Because you can create anything because of the relationships you formed, the knowledge, and your style of being with people. So what in the world is next for Jason Malone?
No, I appreciate that. First of all, like, all glory to God, man, because it could have been very different, right? As a kid growing up where I grew up, being African American in the 90s, it could have went very different, right? And so I've been very fortunate and blessed to have the opportunities that I've had to be exposed to the things that I was exposed to by my parents, so that when certain things occurred in my life, I had the depth for a light bulb to actually go off, right? Because of the things that I was exposed to. So it put me on a frequency level that allowed for the future to happen. So I'm super appreciative of that. But in terms of like just the legacy, I view real wealth as like family, right? And so when I look at, the kids that I have and my extended family and my friends, and I think the legacy is in my ability to impart the information and the knowledge that I have, so that more disciples, more of what I have accomplished can be achieved, particularly in our community, because not a lot of it exists. And so I'm very big on that part, passing on financial literacy, understanding like economics and how the world actually works, understanding like the power that is inside of them and not relying on somebody on the outside to sort of dictate your value, understanding how you yourself, we all have like our individual values. We just need to understand like how to maximize it, package it so that we can market it and get back from what we can get from the world. And so that's like the main legacy for me, because obviously I have financial goals and things that I want to achieve, and, you know, I'm trying to hit a billy, right? So like that is, don't get me wrong, but the core, the driving core is to like, number one, make sure my kids get it. But number two, like all the other little black boys and brown boys that don't get the same opportunities, you know, just because of the dynamic that exists in our country, so that they can be exposed to those things and understand and realize that they too can achieve what I've achieved. Like, you know, like I said, I've been blessed, man. I'll be remiss to just be like, yeah, man, I did it off, you know, out the mud, like all on my own. Like, to be real, I understand that I've been fortunate. And so I think the core for me is to make sure that other young black and brown boys and little girls can grasp that as well.
Yeah, and I love that. I love that you embrace that. I share a similar passion. I just want everybody to know, whether you're black, brown, Latino, female, gay, straight, this is the one place on Wall Street when you open an account that is as equal and fair, and you can compete and do extraordinary things financially. Because when you buy those 200-300 shares of Apple and you sell them, nobody cares what you look like on the other end.
That's right. And I think the, you know, we use buzzwords like financial literacy and so forth, but the core of it is ownership, and stocks is like the first step in that direction of ownership, because you have stake of ownership in an entity, and that's what a stock represents, right? And so starting there and practicing that activity of ownership with the idea of like, how do I take this piece of equity or take this asset to create more? Because in America, it's all assets and liabilities, right? Mm-hmm. Are you an asset or are you a liability? Do you own assets, or are you chock full of liabilities, right? And so naturally, we want to be on the asset side of the balance sheet, because that's how we create more value. That's how we expand. And I love stock trading because it's a very easy way to start on that journey of ownership, building assets, which ultimately lead to you building your wealth.
Jason Malone, you are an inspiration daily. And you've been an inspiration on this show.
Appreciate you, brother.
Now, will you come back before you blow up and give me another interview?
I will.
So I have your word that you will always take my phone call. Because, you know, you're running around town with the big shots now.
Hey, man, we're business partners, so we locked in.
Well, you have to call me. I forgot
exactly.
about that. Thanks for being here. I appreciate it. And I appreciate you for listening to another episode of Trading Stocks Made Easy. I will leave you with this message. No matter who you are, where you are, what your background is, there is wealth for you in the stock market right now. Take advantage of it. Get your account open. If your account is open, continue to educate yourself, because we live in a fantastic time where a lot of wealth is going to be created. I want you in on that. This is Tyrone Jackson, the Wealthy Investor, saying I'll see you next week. Where? Right here on the Trading Stocks Made Easy podcast.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.